welcome back. It's John Klotz, host of Money Talks Media. Welcome to our bi-weekly segment dedicated to growing your money in and around the GTA. And we've got a great speaker today. We've got our good friend Laurie Zon, who's a chartered accountant and a CPA, and we've been talking about U.S. tax. And when we took a quick break there, we were talking about U.S. citizens coming and working in Canada and some of the ramifications they have to deal with. So, Laurie, thanks so much for being on our show. And let's talk about some of these things. So we've talked about how Canadians go work in the States and some of the tax issues facing them. But what about Americans coming and working in Canada? What are they faced with?
Well, U.S. citizens living in Canada are faced with a nightmare when it comes to tax season.
Isn't that? Wow.
Yeah.
A nightmare. Okay.
A nightmare, because it is tax season. It is tax season.
I think we're all faced with a nightmare with taxes.
They have to file 2 tax returns on worldwide income. They have to file a regular U.S. 1040, and they have to file the Canadian T1 that you have to file.
Ouch.
So if you can imagine that they have to file 2 full sets of tax returns on the same income, and they have to figure out who they're paying first. So, for example, if they have U.S. source income, they have to pay U.S. tax on that income and get a foreign tax credit on their Canadian return. And if they have Canadian source income, they have to pay Canadian tax on that income first and get a foreign tax credit on their U.S. return.
Ouch.
So now they have foreign tax credits going both ways and sometimes in circles.
Ouch. So what do they do?
They hire a professional.
So and what are some of the things they need to do? So they're collecting all this income. They're effectively, in a way, being double taxed.
They're not being double taxed at all, because
Okay.
if the income is being, if the tax return is being done properly, they will get their appropriate foreign tax credits. The treaty between Canada and the United States is very clear as to which country gets to tax which income first.
Okay.
And the other country will give them a foreign tax credit for the tax that they pay to the other jurisdiction. It just gets complicated.
What would decide who they pay first? What are some of the factors?
Where the property is located, what type of income. So, for example, U.S. source dividends are taxed to the United States first. And
Those are the rules.
Those are the rules.
Okay.
And if they have dispositions of U.S. property, or if they have investments in U.S. property, that income that was earned in the United States, that's taxed to the United States first.
Okay.
If they have U.S. source pensions, those are taxed to the United States first.
Okay.
There's all sorts of different rules.
Different variations.
There's different variations.
What do we get first? I'm curious now, sitting here in Canada.
We get taxed on everything all the time.
I know. That's true.
But, John, not only is their return a nightmare from the perspective of complexities if they have various sources of income, they have disclosure issues that we don't have. So, for example, if they're holding we call it a foreign bank account, and when we say foreign, that means if you're a U.S. citizen and you live in Canada and you have a Canadian bank account with the Toronto Dominion,
Yep.
you have to file a form to the U.S. Treasury Department to disclose that. So you were supposed to tell the U.S. Treasury Department about every single bank account, RSP account, securities account, the maximum value in the account for the year.
Wow.
Yes.
Wow.
And it gets worse.
Go ahead. How worse does it get?
Okay. Well, as you know, that most of us in Canada who are running small businesses will try to plan our affairs by setting up a Canadian-controlled private corporation.
Right.
Well, if you are a U.S. citizen and you have set up yourself a Canadian-controlled private corporation, in the IRS's eyes, you've set yourself up a foreign corporation. So you all of a sudden have to report information about your foreign corporation, which means you have to report basically all of its activities, its financial statements, who owns the shares. And so the poor U.S. citizen living in Canada who's just trying to do everything the way his accountant has told him runs into all sorts of disclosure issues.
Are most accountants trained in this, or is
No.
this a specialty?
It's a specialty.
Okay.
And what happens is a lot of accountants try to do regular Canadian tax planning for their clients.
Yes.
And they don't ask the very most important question, which is, are you a U.S. citizen? Because the laws
Really?
in Canada and the laws in the United States don't go together hand in hand. So, for example, a Section 85 rollover, I don't know if you're familiar with those. So sometimes people will try to do a reorganization, a simple reorganization where they take their common shares, they put them in a Canadian-controlled private corporation that they called a holding company, and they take back preferred.
Okay.
And that's done on a tax-free basis in Canada. But there's nothing in the United States that really mirrors that. So all of a sudden, really, they've incurred a taxable transaction in the United States.
Ouch.
Yes.
And now, if you're looking at a tax return, won't you notice that the person is a landed immigrant? I mean, I know social insurance
No.
numbers vary.
No.
Go ahead.
The problem is that a lot of people ignore their U.S. citizenship because
Yes.
some of them were given it at birth. They
Right.
were born there. I have friends who've adopted children out of California. They are U.S. citizens.
Yes.
There are people who are U.S. citizens because their parents got them the citizenship when they were young,
Right.
and they may not have even asked.
And it comes out of the woodwork.
It
at
comes out of the woodwork.
least
People
opportune
ignore
time.
it. People
Yeah.
ignore
Okay.
it. Unless they're actually trying to travel on a U.S. passport or they have some reason. The thought process is, I'm a U.S. citizen, but I live in Canada. And so since I live in Canada, I don't need to file a U.S. tax return.
Right.
And that's incorrect. It's black and white. If you're a U.S. citizen, you file a U.S. tax return, regardless of where your income is earned, as long as you do earn income.
So what if you're born a U.S. citizen, but you're living in Canada and you became a Canadian citizen? Are you still considered a dual citizen? And you have to? Are these people? Because I can think of hundreds of people.
You're a dual citizen.
Yeah.
But we're only looking at the IRS's eyes right now.
Right.
So from the IRS's perspective, if you are a U.S. citizen, it doesn't matter where you live, you are filing a 1040.
Even if you're a dual, doesn't matter.
Doesn't matter.
Interesting.
Canada taxes on residency. So if you break
Yeah.
your Canadian residency ties and you leave Canada,
Yeah.
you don't have to file a tax return to Canada.
Yes.
But the United States doesn't care where you live. They expect their U.S. citizens
Interesting.
to file a U.S. tax return. For the rest of
Interesting
their lives.
stuff. Yes, that's quite disturbing. I'm sure a lot of people are watching this going, wait a second, I didn't know I had to do that. I can think of hundreds of people who were born in the States who do not probably do two U.S. tax returns.
I can too. They
I'm
call
sure
me every day and they
there you
ask
go.
what they should do.
Wow, okay.
Yes.
Anything else on that?
No, not really. I mean, they must comply.
Okay.
I mean, there's a whole set of rules, and you know what, they're not the most exciting. So when my clients come to me, we start to discuss all the different things that they have to do to comply with the U.S. government and the disclosure.
Wow. Now, what if this has gone on for years? They just haven't done their U.S. tax returns. I figured there's some onerous payment that could be due.
Normally, a U.S. citizen living in Canada, they normally have a T4.
Right.
They normally have Canadian source income. So if they were filing their U.S. return, they most likely wouldn't be paying any U.S. tax anyways.
Right,
So it really just becomes a filing responsibility.
right.
So it's not like the IRS is going to go after every single U.S. citizen living in Canada.
Yeah.
So while they are required to file the tax return, the IRS still hasn't gone after all of them to say, where is it?
How far do they go back? How many years can the IRS?
Technically, people talk about 7 years.
7 years, okay.
But what happens is normally a lot of the clients that come to me, they start filing their U.S. return. And the facts and circumstances are different for each and every individual. So we make sure that they didn't have U.S. source income or some disclosure requirement. So the answer is different for most people.
Perfect. We've had Laurie Zon, chartered accountant, CPA, on our show today talking about U.S. tax. Laurie, thanks for coming out.
Thank you for having me.
This is Money Talks Media. We're going off the air. Have a great 2 weeks and be tax efficient.